Hey, good afternoon or good evening, everybody, and welcome to another video. Today we're talking about the JP Morgan Nasdaq Equity Premium Income ETF, or JEPQ. This one's trading at $49.93, volume of 2.2 million shares. And if we're looking at this from the perspective of the most recent dividends, we can look at, for example, 0.39248, 0.42214. That's pretty good dividends, and those are paid on a monthly basis. And the actual yield right now for this ETF of 9.42%. Just run the numbers on, let's say, a $100,000 hypothetical investment, and let's see how much we have made from that much. And that's $9,420 per year, per month, $785 on average. Now, we could also take the $100,000 amount that we're investing in this ETF hypothetically, and we could go ahead and take this share price of $49.93 and then just simply multiply that by the most recent dividend, so roughly 2,000 shares, and we have 0.39248 as the most recent dividend. And voila, $789.66. Now you can see how it'd be tempting if you had, let's say, $500,000 laying around. I've always kind of considered this in my head. What would I do if I had 5 times that amount and I was able to make $3,000 or $4,000 in passive income just from putting the money aside? You think of someone with a multi-million-dollar portfolio and how they have all these options for cash flow where they can put their money. But one thing to keep in mind with this ETF is that it actually is up. If we look over, for example, just type in the chart here, and we'll look over the past year. This ETF is up 22%. Now, the Nasdaq has been doing good. We know the market is approaching all-time highs in a lot of regards. The S&P, the Nasdaq recently has been doing very good. With that being said, this ETF is up 22% on top of delivering a dividend yield of over 9%. Now, this FinViz, another website I use for stock market research, is 10.38%. By the way, that does bring me up to Seeking Alpha real quick. Check out the link in the description. You get a 30% discount. We have our New Year's sale going on. Happy New Year, by the way, everybody. And with that being said, you get 30% off your premium membership. You get a 7-day free trial, and you can try it out to see if you like it. If not, cancel. You'll be charged nothing. With that being said, let's get back into it. You'll see, we've been climbing the charts here, and the question is, will this come back down if we have a market going down? Then obviously this ETF tracking the Nasdaq while also doing the covered call strategy and the options against this portfolio. It tries to be basically, delivering monthly distributable income and Nasdaq 100 exposure with less volatility. So the main thing is they want to get the income. They also want to have less volatility than the actual Nasdaq index itself. Being up 22%, we can actually check the Nasdaq and see. Let's see here, Nasdaq index, 15,000. The Nasdaq's up 43% in the last year. So with that being said, if the market keeps going up, this ETF could keep going up as well. Not as much as the actual market itself. It's designed to be less volatile, only up 22% in the last year. Now, on the downside, hopefully it's going to go down less than the actual market. So if the market's going down 20%, perhaps this only goes down 10%, and etc. With that being said, it's kind of exciting to think about those larger amounts, especially if you have, let's say, $500,000 portfolio. I'm not saying you would invest all of it into the ETF like this, but it gives you an idea of what's possible with covered call ETFs and also, similar types of strategies like the wheel strategy, cash secured puts, and all that kind of stuff. So this ETF shows you the yield versus other ETFs and indexes, global REITs, U.S. high yield, U.S. equity, and all that kind of stuff. They have the portfolio managers down here. So look at the portfolio. You have the basically Nasdaq 100 index, and we're looking at number of holdings 91 at Microsoft, Apple, Amazon, all those portfolio stats, sector exposure, dividends and capital gains. You'll see the most recent dividends once again paid on the website right here, and you'll see those monthly cash flows coming in. They don't miss on those dividends. Now, they're going to vary, but with that being said, if you have a $500,000 portfolio, just as an example, hypothetical portfolio invested into, getting a 9% yield roughly divided by 49.93. Keep in mind, you could always diversify based upon your risk tolerance. Just a hypothetical example, based upon roughly a 10% dividend yield, and you have a 0.39248 dividend, and we can kind of figure this will be about $3,900, almost $4,000 in dividends just from holding this ETF and really getting a 22% return on your capital within the last year. If you were buying down at $40 a share, perhaps that would be a good entry. Maybe it goes back down to 45 again on a market downturn or retracement. It got down to 46 recently in October. So always a possibility. You could put those orders in and try to get filled on those lower prices. With that being said, thanks so much for tuning in, guys. Hope everyone has a great new year. And let's make it a good one. Let's try to get lots of cash flow on our portfolio this year. And let's really try to get passive income from the stock market, as our goal is to earn passive income, cash flow, and to really just get those dividends to where we don't have to necessarily go to a job. We can actually have the dividends coming in on a regular basis where we have more passive solutions instead of just kind of having to work for money all the time. This is more of the passive income story, and what our journey is on this channel is kind of going to be going over these types of strategies and monitoring our progress, and probably have a community here in the future. So with that being said, God bless. Thanks so much for tuning in, and we'll see you guys in the next video. Take care.